This is New York, the finance district of the whole damn world. And all these buildings, all these people in their big fancy offices, you see all these businesses? All this wealth? Well, welcome to the money. Or let me put it more accurately, welcome to the middlemen. You see, everything we do with our money, our savings, our investments, our insurance, our stocks, it all flows through the kind of people who work here. It's been happening for centuries. I mean, ever since money was invented, there's been a middleman taking his cut. Until now. And that's because the financial sector is finally catching up with the rest of the world. It's going digital. You remember how the same thing happened to the music industry? Almost overnight, CDs became obsolete and record companies had to completely reinvent their business models. The whole music sector was reinvented. Everything changed. And the same digital revolution has happened to the way we shop, the way we read, the way we learn languages, the way we hold meetings, the way we watch television. In fact, pretty much everything has been changed by digital technology. Well, right now, it's finally happening to finance. Yeah, finance is joining the 21st century. Now, I'm not talking about cryptocurrencies. They're interesting, but it's a whole other thing. I'm talking about the system itself, the very way in which the finance industry works. Until now, it's been centralized through institutions like banks and brokers. We had no choice. We always had to go through those middlemen. But now, we're going to decentralize finance, DeFi. Now, DeFi just means financial services that use smart contracts. And a smart contract is simply a computer code that verifies and enforces a contract digitally, without the need for third parties. You don't need intermediaries like a bank or a lawyer. It uses software instead. It's all about using digital technology to cut out the fat in the existing system. Obviously, once you've got this kind of software in place, the whole game changes. In fact, a whole world of applications has been developed that allow people to lend or borrow funds, speculate on price movements on a whole bunch of assets, trade cryptocurrencies, insure against risk, and even earn interest on savings accounts. And all of that without any of these guys. Not a bank or a lawyer or a broker in sight. So no need for expensive offices paid for with your money. Instead, DeFi is built on blockchain technology, mostly Ethereum. Now at this point you might be rolling your eyes, but wait a minute. This stuff is big. Right now, there's 36 billion locked in decentralized finance and 5 billion in loans. It's not some nerdy niche thing that's going on in basements of Silicon Valley. It's everywhere. And right now, the whole DeFi space is exploding. But what else do you think is going to happen when you bring money and the digital revolution together? In just 3 years, the DeFi space has grown exponentially because, of course, as soon as you get one application, somebody builds another one that connects with it, and then another one, and then another one, and before you know it, you got a whole damn ecosystem. And it's that network effect, it's what lies at the heart of this digital revolution. It just grows and grows with compounding innovation, and it's only just started. Most people think that the next 2 to 3 years are going to be the tipping point. So yes, my friend, this is one of those moments, one of those times in history when you were there. A time when the future was laid out before you and it all seems so obvious. Like the moment when Steve Jobs dropped the iPhone and everyone just knew that mobiles were never going to be the same again. So how do you get in on this? How can you make money from it? Well, that's exactly what we're going to find out, because my colleague Mike has managed to track down a guy who's at the cutting edge of what's happening in DeFi. John Quinn at Decentral Park Capital. Here's what we found out.
My background's been in technology and finance, at the intersection of technology and finance. Basically my whole career, I've been working on emergent markets, emergent industries. I cut my teeth in investment banking in places like Fleming's, Credit Suisse, Deutsche Bank, doing international markets, like Russia, for instance. I also worked in tech investment banking here in New York under Frank Quattrone. When I came back from Russia about 6 years ago, I saw this blockchain as an emergent industry that had wide application, not beyond just Bitcoin at the time. And I built a company from that, a decentralized cloud storage company called Storj, STORJ, where I was responsible for capital formation and business development. And we raised about $3 million in equity, and I oversaw a $30 million ICO. So I saw that both in terms of like the network effects available within blockchain and a capital formation perspective, and also the core advantages of the technology. And I was really excited about that. And what I saw from there was, beyond decentralized cloud storage and beyond just store of value with Bitcoin, that there was going to be kind of a moment where all of finance could potentially be disrupted, similar to the way the music industry has been disrupted by the internet. And I really went deep down that rabbit hole last year, and it was kind of my aha moment where this could really be massive.
You use the word massive. How massive can this thing get?
And what we're seeing today is really strong product market fit. So we're already at over $40 billion of total value locked, which is the main metric for how much collateral is in the ecosystem. And that grew from last year about $1 billion in January, and then basically has gotten to $40 billion already this year. And I believe that it could already be $200 billion by the end of this year. But that's just the very, very beginning, because if you think about it, this is a global technology with a global demand. And it's a highly inclusive technology. So anyone with a smartphone, anyone with an internet connection can actually be part of this ecosystem. So if you think about it, there's 1.7 billion people globally that are unbanked. And there's about 3.5 billion people on the planet that have a smartphone. And the amount of people with a smartphone has grown from about 1.7 billion 8 years ago. So it's doubled in the last 7 years. And what I'm seeing is, there's if we take the fact that there will be Skylink, there will be global internet, there will be increased penetration of smartphones, you can roll it forward and think, okay, well, there's a plausible scenario where everyone will have access to this, and where traditional finance companies are more or less siloed in terms of geographies, in terms of products. This is open source, this is global, it's across border, it's transnational, and it's similar to the internet in that you really can't put the genie back in the bottle. And what we're seeing now is really interesting, where China is taking a leadership role. They've launched something called the BSN, the Blockchain Services Network, and very soon they're going to be, as a layer one solution, they're going to basically be using that as a forum to basically do business with China on a global scale, and basically with the digital yuan on top of that. The good news is, from a regulatory perspective, the U.S. is really making big moves. Gary Gensler, as SEC chair, he taught an MIT course on blockchain. Hester Pierce, we affectionately call as Crypto Mom. She's very supportive as well. So the new administration has brought in new leadership for the U.S. government to perhaps catch up to China. But this thing is happening. It's happening on a global scale. Roll it forward, it could have the same impacts that internet has had on multiple industries.
Your company, Decentral Park Capital, had a massive year.
We looked at financial primitives like trading, like lending, like insurance, and we picked protocols that were basically mimicking those financial primitives. And relative to other holdings, Bitcoin, for instance, massively underperformed our DeFi performance. And I believe that DeFi is a very specialized product that requires a team of people to do it. Anyone can buy Bitcoin and buy and hold, but this requires a specialized approach with specialized infrastructure and a team of people to monitor it. And what we were able to do was, because DeFi is basically on-chain data, so all the transactions are transparent. So you can basically understand the cash flows or the assets that are flowing through these protocols. And so we have a proprietary technology which enables us to ingest that on-chain data and then do an overlay of traditional financial methodologies in order to value those protocols. And from that, we basically screen different protocols on their fair market value and relative to price. And we were, I think, basically perhaps the first people to apply that approach. And we've now done that at scale with a lot more names in it. And so this enables us, because there's 8,000 tokens out there, and it enables us to surface to the top ones that might be interesting, that have growth profiles that would demand higher prices. So that's basically leveraging technology to basically surface these opportunities. And then there's a qualitative overlay on top of that, looking in the chat rooms, the discords, looking at who's behind them from a team perspective and their tech stack. That qualitative layer goes on top of it, so for us to be able to make investment decisions that drove those results last year.
So that's very impressive. But 2020 was a crazy year. How are you guys going to repeat that in 2021?
We're seeing 2021 to be similar in terms of growth, basically going from total value locked of 15 billion. We're already at over 40 billion, and we may end up at 200 billion by the end of this year. If things continue on the same trajectory. So a rising tide floats all boats, but we intend to invest in the earliest stages of DeFi. So we're not targeting protocols that have multi-billion dollar valuations. We're targeting protocols that have under $200 million valuations. And that's where we think that the 10x opportunities exist. Because we're ingesting all of this on-chain data and then doing these financial overlays of financial modeling on top of them, we're able to basically understand which ones are growing most quickly. Arguably, we are investing in the riskiest section of DeFi, but that's also where the returns are. So some of the returns that we had last year, we were early investors in Aave, and that returned over 36 times for us. So and Aave is a lending protocol, and in a world devoid of yield, part of our thesis was that people would seek out yield using Aave, and that turned out to be correct. So again, our goal is really to identify the emergent opportunities that offer the 10x plus returns over the next 24 months.
So with an influx of capital into crypto, how are you guys maintaining your edge?
DeFi as an ecosystem represents about 8% of the total market cap of crypto, which is now over $1 trillion, $1.5 trillion. And so, that's grown from less than 1% last year. What we could see is not only DeFi grow as a percentage of crypto, but the total crypto market cap to also increase so that be a larger slice of a bigger pie. But, we're very focused in basically ingesting this on-chain data that before things really hit exchanges like Coinbase, before Binance even really gets a look at it. So we're basically targeting 6 to 12 months before those opportunities. So a lot of the money is really coming in through centralized exchanges, and what we're using are DEXs, things like decentralized exchanges like Uniswap and SushiSwap. And we've built proprietary technologies and tooling that enables us to do things like TWAP and VWAP to basically get in and out of these relatively illiquid positions that maybe trade $1 million, $2 million a day. When not only on the research have we scaled up to be able to identify things, but also in the sales and trading perspective, we're able to go in and speak with OTC desks. We leverage the technology we have in order to basically get in and get out of these relatively illiquid tokens. And hopefully they build up and eventually get listed on a Coinbase or a Binance, and then exit into a lot of liquidity at much higher levels.
So this is all very exciting, and it definitely feels like a very special moment in time. How can regular investors get in on this action?
Unfortunately, not everyone can participate. We're limited to accredited investors, and we've been having great conversations with high net worths, endowments, and family offices. And most of the people that are coming in the round are people that we've already made money for, so people are doubling down on their positions. But decentralpark.io has a bunch of our research for people that are interested in learning more about it. They can click through to our investment materials and get in touch if they'd like to have a face-to-face meeting.
Well, that was John Quinn of Decentral Park Capital. Now, I can't help feeling that we are at a turning point, and Lord knows the world of finance needs disrupting. There are very few times in life where you get to see an entire industry get revolutionized right before your eyes, and even fewer when you have the chance to invest and be a part of those early stages. You see, massive change like this creates asymmetric opportunities, and your returns can go parabolic. Decentral Park Capital seem to be right in the middle of all this. They are one to follow.